Welcome to another episode of the Reboot Chronicles, a no-holds-barred forum with global leaders, authors, entrepreneurs, and CEOs about how organizations stay focused on growth and innovation in unprecedented times. I'm your host, Dean DeBiase, coming to you live from Reviv's North American headquarters in Chicago, and we would like to thank you for joining us from around the globe today. I'd like to welcome Ann Winblad today, co-founder and managing director of Winblad Venture Partners. Today we're going to talk about rebooting venture capital, private equity, a little bit about corporate venturing, always fun to make fun of that group, and some other things. But Ann, it's great to have you back. The 30 years now, you guys just celebrated your anniversary. You were one of the first companies to do major, hardcore B2B software investments, and as a VC firm, and many have followed in your successful tracks there. So it's really great to have you on and talk about this. And we'd love to maybe just kind of open up with a little bit about, tell everybody about a little of the history of, HWVP and what you're focused on now would be great.
Sure. This September, we did celebrate our 30th anniversary. So 30 years ago, last September, actually, we started fundraising in 1987 in the fall, a bad time to fundraise.
Wow, yes.
Our crash. So John Hummer and I went out to raise the first software-only venture fund. It was a tough time for venture capital. No one told me that no new funds had been created for 5 years. So I perhaps would have started another software company since I am a graduated software entrepreneur from Minnesota. So we had about 130 meetings where they told us investing in software companies was the worst idea they'd ever heard. Before we got our first yes. 3M in Minnesota was the first LP limited partner that committed to us. And our focus was being the first investor in software companies. In our first two funds, we did a few B2C companies, but mostly enterprise. And starting with Fund 3, we did all enterprise software companies. So that's what we've done. We've launched just a little less than 200 software companies, had a lot of IPOs and exits, and we are just beginning to invest our 8th fund.
Wow, that's impressive. And many have benefited from that. Andreessen Horowitz and many others have said software is, the future. Let's focus on it, where a lot of others were really pivoting more to consumer and consumer-based stuff. So, and what's it like out there now in San Francisco in terms of the investment community? And a lot of the tech firms are shut down, but again, these are the inventors of a lot of the technology that we're using right now here on this. Have you found things to keep moving, or is it kind of put a pause in the progression and the momentum and the things that were happening back in January?
Well, we've done a couple new investments. We just announced an investment company out of Canada called Smart Access, which is in the retail automation space. We'll talk about that later. But the deals that we've been closing in the last couple months were already in our pipeline in March. So we spent tremendous amount of time with the entrepreneurs in person, taken them to lunches, gotten to know them. The intellectual capital in a software company trumps the financial capital all the time. So knowing who we're going to invest in and for them to get to know us as investors is important. So it's been weird not to take a bunch of entrepreneurs. I always try to have 3 lunches a week where I take an entrepreneur I've never met to lunch. 2 out of 3 are enjoyable. The third usually is unusual. But that's part of the venture part of early stage venture capital. So it's been a little lonely as a venture capitalist who likes to meet new talent, hear new ideas, and do this in person versus just in virtual meetings. We've always used virtual meetings
Of course,
in our
yeah.
mix, but not 100%. So we've gotten used to it, but we really have a little bit of digital fatigue like everybody else does.
Right. And what's your favorite place to do lunches, by the way?
Well, actually, I'm an early member of the Battery Club.
Oh, nice. Yep.
And I like having lunch there. It's very quiet. It's a great staff there, and they've done a lot of virtual events, but I've not done any of those there. So I have my sort of regular table there and regular time and 3 lunches a week. But I haven't had a lot of lunches lately.
Yeah. I'd like to say that was an audience question, but I'm sure some entrepreneurs might just stumble in there one day and try to meet you. But it brings up this whole dynamic. So Tim Draper was talking to us the other day, and he's like, "I've invested in a couple companies, and I've never met the people. We can't stop. We have to keep going." And meeting them digitally is he knows I'm a big breakfast person. I like to meet people for breakfast if you're hiring them or investing with them or joining the board, and you kind of see how they are in the morning. It's kind of a test. Now I gave my secret away, darn it. But lunches to me are actually better. You can really kind of dig into things where it's not as hurried. And so what kind of investments are you playing with now? I think you've got 3 or 4 that you're personally on the board with.
Yeah, the our investments are all. It's been very interesting to. I think we talked about this earlier, that every single company on the planet was in somewhere in the process of their digital transformation. They didn't know everybody was going to get a digital transformation final exam in March of 2020. So as a result of companies having to pivot so rapidly to everything digital, it's really exposed a lot of opportunities for investments in the enterprise software space. Everything from the supply chain to the engagement platform to operating really purely digital. It's been amazing how companies have pivoted. I'm on the board of the University of St. Thomas in St. Paul, Minnesota, and to watch an entire university pivot to online is also quite an experience. But even there, looking at some of the software, it's not new software. It's software that's been used for a long time that sort of is creaking under 100% usage, being the primary platform versus an accessory platform in corporations. So we keep looking at that. As I said earlier, we've just invested in a company called Smart Access, which actually brings automation to what's called the deskless workers that are on the distribution floor or on not sitting in an office, that really have to stay in touch with the latest procedures, processes, and be communicated with. And that's been a real challenge for companies to manage their own workers without walking around.
Yeah, that's a bingo right now. That's going to continue to boom, I'm sure. The just looking at some data here from, it's early, but in March it looks like free overseas were investing about a 22% drop. I assume that's just going to get a higher and higher number in terms of actually dropping. Do you feel like VC is still kind of like running packs? Like when people stop investing, we all kind of slow down, and when we're hyping it up, we're all kind of chasing the same thing. Or is that
Well,
still a behavior pattern?
well, you know, there are lots of fair weather friends to venture capitalists, corporate investors,
Right.
private equity firms, sovereign wealth firms.
Yep.
Uh, and, when the weather's fair, everybody's in the pool. When it's a little cloudy out there, people go back inside. So we'll really see who stays the course here. Last year was, again, almost a record year of venture investments worldwide, as it
Huge.
was the
Yep.
year before, huge. But 50% of those deals were $50 million deals or greater. And the number of startups, the number of companies that got their first round of venture capital was almost at a 10-year low.
Yeah.
So much of the money was going to already proven companies. And that's still happening. So you see a lot of big checks being written, especially into areas where they've been fortunate beneficiaries, of really high demand due to companies going virtual, telemedicine, more biotech, communication software companies. But we'll see what happens with that startup number, the companies getting their first round of venture capital. It globally, early stage investors tend to get freaked out first. outside of the U.S.
Right.
If you also look at density of venture capital, a lot of it happens in the Bay Area and on the East Coast. You're in Chicago. I'm from the Midwest. That tends to shrink, and that was just getting better as an investment area.
It
We're not
was.
on planes visiting companies, and yeah, I'm on 3 boards in Minneapolis, a foundation board, a university board, and one of our private companies. I have not gotten on a plane to Minneapolis uh, since March. So I think the center of our country will suffer quite a bit because most of the money is bi-coastal. So it will affect the early stage entrepreneur. At the same time, the seed investing area, which is non-venture capital, tends to be fairly robust. So those entrepreneurs who have a great idea will find money somewhere.
Well, that's a good sign because there's just a concern that there's been a consolidation of power and money, and like you said, people are investing in more comfortable investments a little further on versus high risk.
Yeah.
Probably gonna have Steve Case on, my old boss, sometime soon here. The whole democratization of investing, and for the rest of us, some people are saying, hey, this pandemic and transformation and lack of travel will accelerate that. So it's kind of a contrary view. It's like the center maybe won't get hollowed out; it'll become stronger. I'm a little skeptical because I know where most of the money is, and fear is a powerful thing.
Yeah, we've invested across the country. I will say that we put a higher bar on companies that we have to fly to because we can't just drive down the street, help them interview some of their C-suite people. We can't be there when they might need us as an early stage company all of the time. So we look at the quality of the startup team, the quality of the CEO, but we have investments in DC, Minneapolis, Portland, uh, you know, Boston, New York. We've made investments around the country. Uh, and our most recent investment is a company in Ontario.
Yeah,
That,
tell us about that one. The retail automation, I think it is, right?
well, again, what we've seen in this, we're all in the digital pool together, is that there are a lot more needs for enterprises than we even saw. We're remember opportunists, the entrepreneurs or the visionaries. And an entrepreneur came to us with an early stage company with a large customer in tow, and I cannot name the customer, who is a very large retailer, who really saw the challenges of keeping their deskless worker, people that are in the warehouse, people that are not at a desk, people in the stores even, in the same automation platform that the company people that were at desks. How do you inform them of something new? How do you communicate with them? And so it is a platform that actually brings all of this to the deskless worker. You'll learn more. It's called Smart Access out of Canada. So it's very, very early stage. We usually invest in companies that have less than 10 people. Uh, and when you're talking about investment, I can probably give you the MuleSoft story, which
Yeah, that was
is
a huge success for you. Exit to Salesforce, right?
yeah, after a very successful IPO.
Yeah.
MuleSoft was 5 people. The founder was in Malta, and 2 guys in Argentina, 1 in Germany, and 1 in the Bay Area. Uh,
Malta. Talk about a hard place to get to. That's a little island.
yeah, but when we look back at that company, we did not meet the 2 early employees from Argentina. We did not meet the early guy from Germany. And
Wow.
we met the real technical founder after we met the, you know, early stage CEO in San Francisco. So in many ways, it was like a virtual investment. That company, of course, went public in 2018
Hmm.
2017, very successful multi-billion-dollar IPO, and was acquired by Salesforce a year later for just under 7 billion, with about 1,200 employees, up from the 5, and about 400 of those employees in Argentina, by the way. So when we think about the future, we have to look back at MuleSoft and say we don't necessarily get to meet everyone. They might be all around, not just the country, but around the world. And that is becoming more of the type of investment that an early stage software investor like us would do. So it's not necessarily all the breakfast meetings and lunch meetings. And that was an investment that I was on the board from the beginning and led that deal. So we for a long time, in order to find the best software companies in the world, have had to get used to the fact that we're not going to meet everyone in person. That we have to really trust the competency of the founders and the opportunity, the market sizing that we determine by looking hard at our due diligence, that there might be a really big opportunity there.
Right. Lots of comments on that one. So that probably gave you some good muscle memory now. So you probably are going to be better at remote investing than others. I know a couple VCs that probably passed on that because of where they were or where they weren't. But it also brings up the whole part of finding the next great software company. It's like it's going to be international, and they're going to be in disparate locations all over the place. I mean, take Revive as an example. So headquartered in Helsinki and Chicago, Valencia is the R&D hub. You know, it's like you cannot just find these nice, neat, tidy Silicon Valley packaged up companies that have 10 people and they're going to go to 1,000 in Menlo Park anymore.
Correct. I mean, we just had a recent exit of a company called Sonotype, which is based in the DC area, Washington, DC area.
Good company, yeah.
Yeah, and there, the first time that all the employees of the company had met each other was in January of this year.
Wow.
They had the first meetup of all 500 employees, and that
Wait a
was
minute. The first meetup was a closing party. Is that what we're saying?
it by chance it was. The company
I love
Vista
that.
bought majority control of the company. Vista Equity bought majority control of the company in December. We maintained a small ownership piece there, but they had already scheduled their meetup of all employees in January. So it did turn out to be a closing party.
That's funny. Yeah, last company I was chairman of, we sold to Salesforce, but we had just moved in a brand new office tower right on the Chicago River. And so everybody got comfortable, got in their new seats, and we announced that, oh, by the way, Salesforce is acquiring the company. Total coincidence, obviously, as you know, it always is. But
Yeah.
it brings up the question about MuleSoft. What did Salesforce see in it to actually buy it so quickly? Because on other investments, they're waiting longer. There's other things they have options to buy. But they snatched that up pretty quick after the IPO.
Well, I think a couple of reasons. Salesforce was a corporate investor in the company. Uh, they were not on the board, and they had been a corporate investor for a while, very small piece. And Salesforce tends to invest in quite a number of enterprise software companies. And I don't believe their intention is to buy all of them.
No.
They have a very good investing arm.
Yeah, John Smorjai has got a great team over there.
We also had a strategic relationship with Cisco, and Mark Benioff was on the board of Cisco at that time. Mark is also a guy that tends to roam around. He roams around the city. He goes and meets people. He got to know Greg Schott, and so did his people. So you'd be surprised how often you see Mark. He really is part of the fabric of enterprise software here in the Bay Area, let alone the world. And I believe he sort of kept his eye on this company. The company was a very high performer in its financial model, in its growth model. And Mark's an opportunist. He saw a huge opportunity. And as we now know, that company has created more than $1 billion a year opportunity for Salesforce, just as one of their acquisitions. So
Yeah,
I credit Mark for keeping his eye on the ball. And there's a lot of balls he keeps his eyes on.
yeah, and he's got good people working with them over the years. That's a good segue into CVC, Corporate Venture Capital, because the way they run that group, it is very strategic. There are things that they may invest in that could be part of their product roadmap. It could be an acquisition down the road. It could just be a partnership. but it's not one thing. Other companies like Motorola Solutions have a corporate venture group that is very focused on it needs to have some type of a product fit that might be changing now with post-pandemic. Whereas if you look at someone like Kraft, foods, it's like they're investing in things that are non-core, unrelated, still food, but very different. And over the last, I'd say 10 quarters, there's been a couple quarters where corporate venture capital has outpaced some VC categories of investing. What do you see happening next with corporate venture, especially the ones that end up playing with a lot of the VC community?
Well, corporate venturing has been part of the landscape here for quite some time. I think the stats are that close to 50% of all the deals done, especially later stage, have a corporate investor in them. We'll see what happens as we go into 2021, how many of these corporate venture arms remained funded, even though they're doing well, as if we end in a global recession and belts are tightened, is that part of the
Right.
tightening of the belt of corporations? So we've gotten to know many, many corporate investors. Um, I do think that for those that have the the same motivation as us, that our job is to help build great companies. We have corporate investors in many of our companies where we believe that we are of like minds, that we're there to help build a great company, not to create an outcome for a particular corporation. And we've had great results in working with corporate venture investors. So we like seeing them in the landscape. And we like having a different point of view at the board meetings. Many of the corporate venture people do not take board seats.
Right.
They are required, if they represent a public company, to have a lower level of ownership than we might have. But they've been good citizens at the venture capital table.
Yeah, they always keep it under 19% under the old accounting rules. But yeah, I've seen some that are more aggressive than others. Teaching corporate innovation, new ventures, partnering at Kellogg, it's like just when you think you should defund something means probably exactly the opposite. You need to keep funding those groups, even if they haven't had a very successful track record. And quite frankly, I think they need VCs and VCs need them, and they're even starting to play into the private equity groups. One other category that might be interesting to talk about. Do you kind of play around with incubators and accelerators in terms of the broader question is, how's your scouting work? How do you find the next great thing?
Yeah, I mean that's the big question. I mean, your results are only as good as your deal flow, and so you have to make sure you're not just getting the runs of the litter, that you're seeing the litters.
Right.
Uh, so what it means is that you can't get lazy about your network at any time. I've been around a long time. Many of our partners are younger. And that's, you really just have to assume that you have not met all the talent that's out there. And that really, especially as a young venture capitalist, is what should take up the majority of your time.
Right.
Is our job is to audition the future, and we need to have a lot of auditions to make sure that we're picking the best future, and also that we're seeing the patterns that emerge to what might be potentially available. So it really, really, really is about expanding your network. I personally love spending a bunch of my time at universities,
Hmm.
uh, and I try to make 6 or 7 to up to 10 university visits a year. um, and as I tend to think that you meet talent early and they come back and knock on your door. It's a we do judge business plan contests and go to incubators and whatever. But personally for me, I find that entrepreneurs schools of entrepreneurship are really emerging all around the country, that more and more people are starting companies younger. In the enterprise software space, we tend to see it a tiny bit older um, CEO, but not that much.
Yep.
These days, in 15 years ago, It used to be sort of the 40 something were the starters of the enterprise software companies, but not anymore. So I personally find meeting with schools of entrepreneurship, schools of engineering, uh, and doing the university circuit is the most fun for me for deal flow.
Yeah, yeah, I agree. And even government agencies, it's amazing what kind of technology you can find out there. Um, so, are you using the R word at all? Do you feel like we're headed into a recession? Some people say we already are. The IPO market's an interesting barometer, seems to have just picked up this week. You've got, I feel like it's 1999 again. The two companies are Snowflake and Lemonade. And those of you that don't know what those are, they're probably scary words, but some interesting liquidity events coming up in the next few weeks. It seems like we're trying to squeeze in a quick IPO window here. But what do you think it looks like without getting into the election and all that? Just
Yeah,
the basics.
yeah. I mean, technically, we are in a recession. Um, the performance of the stock market seems to have no alignment with other macro events, which is
Yeah, it
interesting at
basically came
all.
back.
Right,
Yeah,
44% since March. Um, I don't know Lemonade well as a company. Snowflake is an enterprise software company. It's been around, started by a Microsoft graduate.
right.
So it's not like 1999. It's got uh, I haven't had a chance to read their S1 since it just got filed, but I think it'll read like a company that has been around a while and has determined what their strategy is. S1s these days, the documents you file for your IPOs require you to talk about how you're going to measure strategic success. So you have to give metrics,
Right.
which is really interesting for any business student to read, by the way. And it'll be interesting to see what Snowflake has as their metrics, but they will have metrics because they've been around for a while
Yeah.
and are recognized as a pretty strong company here in the Valley. So, we'll see how much this public euphoria for tech stocks and tech IPOs, how long that lasts. I think we're really
There's definitely
going
pent up demand for it.
to, yeah, I mean, there's definitely money out there going into the stock market. We'll see what happens in the fall. We are really in uncharted territory with this pandemic, and we don't know what's going to happen in our future, and we don't know the full effects of this. And I'd be the last one to predict what those full effects are. But for right now, it seems like IPOs are still happening. Stock market is going up. Tech stocks are in favor. Clearly, the enterprise software market has been at worst steady as she goes
Right.
because we've had to support the digital platforms of all the global corporations. And in fact, those corporations have had to improve their digital platforms and continue to consume software in order to survive, let alone thrive in the environment we have right now.
Yeah. Digital transformation is kind of an understated word these days. We need to come out with something a little more impactful. They finally woke up and said, you know what, we have to get serious about this. And it ripples through every category, cybersecurity to privacy to authentication and customer relations and communications like the company in Ontario. And we really appreciate having you on today. And hopefully next time we can meet in your office and
That'd be great.
get
Yeah,
a nice view of the bay and
or
Salesforce
breakfast.
Tower in the distance there. But
Right.
it'd be great to get some parting words from you. There's a lot of entrepreneurs that have been kind of asking questions. Some of the questions I've been asking have been in the chat box here. But just some words of wisdom for entrepreneurs around the world who, someday would like to go to lunch with you. What should they be doing to get ready for that round of funding and maybe what not doing?
Well, first of all, they should be talking to other entrepreneurs who've been funded and really understanding the landscape of venture investors who might invest in them. It's I find it still rare that entrepreneurs talk to other entrepreneurs about funding strategies, and they should do that. They should reach out to us and just let us know what they're doing, even if they don't have their pitch ready yet, uh, because it does take months to get an investment closed. We don't do an investment. We say we give fast no's and slow yeses.
Hmm.
So they want to get in the slow yes trail right now.
Right.
It's not a time to retreat. It's a real time to polish your strategy and look ahead into the new normal world and how you might have a leading presence in the new normal. As you've described it, the digital fissures in these companies are huge. There's plenty of opportunity. And so we'd like to hear from you how you can add value in the future. And remember, we're not funding products, we're funding companies. So how do you build a company around a great product versus just build a great product?
Yeah, great advice. Well, all you aspiring entrepreneurs, you heard it here from Ann. Ann Winblad from Winblad Venture Partners, now celebrating their 30th year of kicking off the enterprise software investment cycle. And as you've heard, it is going to be, I think, an exciting 30 years to come. So keep inventing, keep going. And thanks so much, and we'll see you soon.
Thank you and stay well.
Thanks. Appreciate it.